Hey, welcome back, everybody, to the Elevate Cleveland podcast. I'm your host, Chris Doyle, alongside my guest here today,
Mo Hussein.
Mo, actually, so very, very close to my heart, you guys at Everything Money, because really the reason I'm doing this podcast, a lot of it, I got a lot of inspiration from you guys.
Oh, good.
So a small time podcast like myself. If you guys don't know Mo, he's one of the co-hosts of the Everything Money Show on YouTube. Yep. 125,000 subscribers.
Actually about 137, 140 now.
Yeah, so huge. But again, big inspiration for why I started this was because I wanted to kind of emulate you guys and your success. Right. We're growing and everything, and you know where you guys are at right now is just very inspiring.
Yeah,
you know?
Thank you. I appreciate that. Yeah, I remember when I came in to talk to your group here at Liberty Home Mortgage.
Yeah.
I always get that name confused when I talk to Hesh. She's
Liberty
like, what
Mutual.
is wrong with you?
Yeah.
But no, you guys came up to me and you were eager to do it, and I was like, yeah, let's do it, man. Let's do it. And you've grown pretty well since.
Trying to, yeah. I mean, I think we're 4.5 months now, and we're just going to keep growing and just having great guests.
It's a grind, I'll tell you that.
It is, but it's fun. So Mo,
fun.
Obviously Everything Money, you guys have Sharemost Capital that you run as well.
Sharemost Capital is my family office that I run.
Absolutely. So just traditionally, and probably the easiest way to start is just start from the beginning.
Start from the beginning. So I kind of like to start so I'm an investor. I've been to medical school. I dropped out of medical school. I have a very unique story, I think, but it's actually a lot less unique than I thought, because there's a lot of people, a lot of our subscribers now, they're like, well, I'm in my second year of medical school and I have a passion for investing. And it's like, okay, well, so I was 14 years old and I found investing.
Sure.
I was in the Brecksville High School computer lab and they gave us the stock market game. And everybody, of course, screwed off with it. But I kind of took it seriously, and I was like, oh my God, I could sit here and make money without going into the office and working for some idiot. Yeah. So I started playing this game, started making money. My dad gave me $500. I turned that into $1,000 pretty quickly. And he was like, okay, you're actually pretty good at this, but I'm not giving you any more money. You can go get a job. So I went to a golf course, got a job. And then all that money I just started putting into the stock market and just kept growing and growing. And that's kind of what I did for a job throughout high school and college. Mm-hmm. Come when I'm 21 years old, Dad gave me the money from my college account or whatever it is, $125,000. And he said, do what you want to do with it. Pay your debts off, trade it, do whatever. I was like, okay, well, I'm going to trade it because I was 21 and crazy. Within 2 years, I turned it into $1 million. And
it's incredible.
Yeah. People ask me, could I do it again? With this mentality now, no, I couldn't, because I'm more conservative now.
Sure.
I didn't really know as much back then. So at that point, I started getting in more to sound investments and started looking, and I also applied to medical school at that point, got rejected. Then I started my first fund, which was a trading fund. Started doing a lot more trading on charts, and this is a shameless plug. If you want to go to everythingmoney.com, just sign up for my Bid and Ask Nation. You can jump in and learn to trade from me.
It's a good plug.
Yeah, but I still use the same principles that I used back then, and it works, and it's worked for a very long time. And but the investing side really just came naturally to me. Fell in love with it. Mm-hmm. It really helped that I went to medical school and got through 2 years and was like, this is not for me. I'm dropping out. Mm-hmm. So that was a big thing for me now, is to tell kids, guys, if you're not passionate about something,
sure,
just move on. Cut your losses. It's even when you're in a bad investment and you're not into it anymore, you don't understand anymore, move on. There's better things out there that you can do than waste your life doing something that you don't want to do. Mm-hmm. And that's that. Luckily for me, I was able to embrace that and do it. Mm-hmm.
And so guys, if you've ever been to the Everything Money page, you can see pretty much Monday through Friday, you're day trading and people can view you.
Yeah. So I do a live show every morning at 9 a.m. on YouTube. So that's just basically the news of the day. I also teach some trading, and then we do live day trading also. And then we post multiple videos per day about value investing, trading. We call them evergreen stuff, where we're kind of teaching people maybe about credit cards, investing, Roth IRA accounts, etc. Mm-hmm. So it's literally everything money. We do a lot of real estate too. Mm-hmm. And it's just a great resource for people that don't know where to start. Mm-hmm. And that was our goal.
Absolutely. And that's kind of what I want to get out of today, Mo, is because I'm a novice at this stuff, man. Yeah. Like I'm not, mortgages. Well, I'll talk to you all day about mortgages. Yep. I know exactly what I'm talking about, real estate, in that sphere. Mm-hmm. But stocks, I have a brokerage. I do a little bit on the side, but it's nothing grandiose like you do, right? So I want to start from the beginning and just ask you a couple questions. They'll be pretty easy to start with,
Sure.
and we'll get progressively
We can get into
tougher.
the nitty-gritty.
Yeah. So, I mean, just explain this to me. So we'll start stupid easy.
Okay.
What is the stock market?
Okay.
And how do you start investing?
So fortunately in the United States, it's very easy to start investing. I'll answer that one first. You literally go to a website, charlesschwab.com, TD Ameritrade, anything, and open a brokerage account, and you're good to go. In other countries, it's a little more difficult.
Sure.
They have to go through a lot more. They don't have as good of a stock exchange as we do.
Bureaucracy and
Bureaucracies are in place. Of course, we have bureaucracy in this country to the
Maybe
next
not
level.
yeah.
But it's different overseas. But what is the stock market? It's basically publicly. I like to say, and I'm going to deviate for a second.
Sure.
So when we look at a business like you work at right now, it's not a public company.
Mm-hmm.
But I would look at this business and say Apple the same. Because they're both businesses. People think that stocks are these ticker symbols with numbers flying around and there's no business behind it. There's real business behind every single company out there. So the stock market is a conglomeration of all of these companies put into one, and it's on an exchange where you can go and buy pieces of these companies. So one thing we always like to say is when you're buying a ticker symbol, when you are buying Apple, you are buying a piece of the business. You literally own the same thing that Steve Jobs, Tim Cook, Warren Buffett now owns. You just own less of it, of course, because you know billions of dollars.
Sure.
But it's exactly the same thing when you buy one share of that company.
I know you guys do a lot with the 8 pillars.
Yeah.
So my next question, how do you determine if a stock is worth investing?
That's a good question.
And then talk about the 8 pillars, because I know you guys are obviously huge on that type of that methodology.
Right. So the 8 pillars. So what he's talking about, through Everything Money, we have these 8 pillars and eight things that we look through for a company. And what we're looking at it's basically a screening process. Some people will look at I would say this, a lot of people look at a company on TV and they go, oh, this stock is $25. That's a great deal. It's not $1,000. It's not $100. Well, the stock price doesn't matter. The stock price matters of how many shares there are in the company. All it is the market cap divided by the number of shares. Coming down to a valuation, you want to look and see, do they pay a dividend? Can they afford that dividend? How many shares do they have outstanding? Are they adding more shares to the market, which is giving you as the investor less piece of the pie overall? Do they have cash? Are they in crazy amounts of debt? What is going on in this company? So there's so many different things that we look at before we come even down to scratching the surface of starting to read into like annual reports or digging into opinions that other people have, bullish and bearish cases on a stock.
Sure.
But these 8 pillars are just 8 pieces of the pie that we look at to say, I can look at a company in 30 seconds and say, am I going to invest in this or not?
Really? Yeah.
The majority of the time, the answer is no. The goal, as Warren Buffett says, your job is to say no as often as possible. And you're going to find one diamond in the rough. That's going to be your investment.
Yeah, I love the story you told me the first time we met when you were like, "Oh, my dad just keeps investing in all." Was it like Fox News or something? And he's like, "Oh, it's green. I gotta buy." And you're like, "No, Dad, stop."
Yeah, my dad's so. Anybody that doesn't know, I am a big disbeliever in Tesla. I drove a Tesla here today. Love the car.
Yeah.
It's one of my favorite car companies in the world, but their stock is just wildly overvalued. It's going to come crashing down one day. But my dad is texting me on Friday, and he was like, we got to buy Tesla. This is the time. Go into that a little bit.
Why you do not like Tesla?
Oh, well, number one, they don't produce enough cars to justify their valuation. I mean, they were $1 trillion company. I think in the United States we sell, I actually want to kind of look this up, 14 million new cars a year or something like that in a good year.
Sure. Okay.
Tesla sells 1 million of those, and they have a market cap that's bigger than Ford and GM. It doesn't make sense. Plus, they're diluting the shareholders. So instead of going out and taking out debt, they're just saying, so let's say they have 10 shares that people can buy. Stock's $100, $10 per share. What they're going to do is, instead of going and taking on debt, they're just going to say, now we're going to go out with 20 shares. So instead of placing out debt, or somebody is going to go and buy those shares. Yeah. That's money into the company. And that's a way for them to go and do it without raising debt. But people don't look at shares outstanding. And what they're doing is just 20 shares outstanding, 30 shares outstanding, 40 shares outstanding. And every time there's more shares outstanding added, you as the shareholder who once, when there was 10 shares at $100, you own 10% of the company if you owned one share. They took it to 20. Now you don't own 10% anymore. Now you own 5%. Yeah. Then you own 2.5%, and so on and so forth. So that's what they're doing to their shareholders. that coupled with supply chain issues, there's just so many.
But nobody
reasons
really looks into it that
no, they
deeply.
Don't. No, they don't.
They just your average.
They just see ticker symbol. They see that Tesla was at $1,100 a share in December, January, and now it's at 850, and they're like, "Oh, this is a dip. We should go and buy this." When I look at it and say, this stock should be $150 before I even get involved.
And that's why I love your guys' the 8 pillars and the methodology that you guys use instead of, a lot of people, especially my age, right? 20, you look at the recent college grad. I'm 26.
Okay.
You look at recent college grads, around 30 years old, around that time frame, people who are, aggressively, investing, and they just scratch the surface.
Yeah.
They don't go into that deep of a level. And I think especially today, I mean, you look at, any index fund, it's bleeding. You know what I mean? And I think all those meme stocks, which we'll get into, are bleeding. And that was all the hype.
It was the hype. And that's what drives people to the market, and this whole fear of missing out thing. I mean, when you see your friend buy a bunch of shares of GameStop and they become an overnight millionaire or a couple $100,000.
It's true.
And they just think, everybody thinks it's so easy, I missed out on it. And then you jump in there and then the stock comes crashing down because you have no methodology for why it happened. This is what Paul always says. He said, if you don't know how you're going to make money, you don't know how you're going to lose money. And that's absolutely true. So that is a big problem that we see with these meme stocks, and just not even meme stocks anymore. It's just real. Like, you look at the Squares of the world, Roku, Tesla. I mean, all of these major companies, PayPal, it's incredible. Facebook, the list goes on of great companies that were very overpriced and their market caps have just been cut 30-40%, and nobody understands why. There's a reason why.
And you guys did a video, I watched it a couple months ago, where you were talking about meme stocks like AMC, right? And I remember Paul was like, I'm only going to do this because I keep getting a lot of comments on it, but I absolutely don't even want to go through the first pillar.
It's true, because I mean, you look at it and there's the situation they're in, they have basically no cash flow. And
that's insane. But it's really, I mean, even you, I'm pretty sure you're the one that said it, or maybe it was Seth, but you're like, it's a dying model.
Yeah, it's a dying model. Now, to that statement, a dying business is worth something. Even everything is worth something if somebody will pay for it. So Warren Buffett used to call these cigar butt companies. So even if a business was dying, all he wanted to do was go in and grab the last ash on that piece of cigar. And there is value to it. But that's not what people want to do. They want to go and send this stock, quote unquote, to the moon, like everybody talks about.
To the moon, baby.
And this whole, it is a dying business. I mean, who's going to go to a video game store anymore? I don't even know where video game stores are anymore. Like, you used to see them on every corner. The GameStop, the EB Games, I mean, Best Buy, everybody had them. But now it's all just download it. I saw a PlayStation 5 the other day for the first time. Have you seen that thing?
No.
So the PlayStation 4 was like this big. The PlayStation 5 is like this big. I was like, I thought you were supposed to go smaller with the new technology. So yeah, but it was cool.
Just doing a lot more.
Yeah.
But what? So okay, so we go back to, like, COVID, March 2020, right?
That was a very interesting time.
Very interesting, and we've kind of been on this upward slope since. I mean, maybe until January of this year, really, before everything started ticking down.
Slowed down.
Obviously, you have other factors with Russia and Ukraine and so on and so forth. But we have been on a good trend upward.
It's unbelievable to me. It actually blows my mind.
So talk about that then. So what was really driving that? I mean, was it COVID? Is it because people are able to buy stocks on Robinhood it is easy as they're able to order on Grubhub?
Yeah. So the retail investor definitely changed things, and that's the people out there that could just pull up a Robinhood account and just go invest. I am not. This is probably a controversial, or people will call me stupid for this one, but I don't believe that COVID was the cause.
Sure.
COVID was the straw that broke the camel's back, but I still think that overvaluation was the reason that the market pulled back as much as it did. Because when the market crashed in 2020, February or March and April, there were about 5,000 cases out there of COVID.
Yeah.
And we hit a bottom on March 19th or March 17th, whatever the date was. Next thing you know, the stock market's rising up.
Crazy.
We, as of January, February, or December, whatever it was, we were at all-time highs, and we had how many cases in the world? 50 million cases? I don't think it was COVID. If it was COVID, the market would be even lower than it is today. I mean, it just doesn't make sense to me. I mean, then we had Russia-Ukraine. I don't think Russia-Ukraine is the reason for the crash. There's always going to be an excuse of what was the reason for the crash? The .com. What was the reason for the crash? Overvaluation.
So
2008. Overvaluation.
So a lot of these are just artificial, you think? Or
no, I don't think they're artificial. It's just companies get overpriced because people just keep buying and buying and buying on good sentiment. And at some point, everybody realizes that these companies cannot justify their valuations. I mean, the reason that you saw pullbacks on COVID was people were saying, okay, these companies are not going to be able to drive consumers anymore. So the stock price is going to come down. We're going to bring the stock price down. Well, that wasn't the case because everybody started. I mean, that actually was the case for a very long time with lockdown. I mean, you saw companies like Costco, Walmart, Target that continued to go higher during COVID because they were still driving revenue and profit. Nobody else was. So I just don't like the excuse that people say that COVID caused this, Russia, Ukraine caused this, the .com causes. It's overvaluation when it comes down to it. And that's what we do is we try to teach people how to value a company and that you shouldn't be paying for these absurd growth numbers when they're not justified yet. I mean, this is another one we say all the time. If I'm an 18-year-old kid and I'm playing baseball and I have the potential to be Mike Trout, pay me. What you're doing to Tesla right now is you are saying, here, 18-year-old kid, I'm going to give you $35 million a year because you might pan out to do this. Tesla might pan out to sell, I don't know, do $1 trillion in revenue a year, or whatever their wild projections are on this company.
Yeah,
that's the same thing that you're saying with a high school baseball player. You're going to give him the potential to be one of the greatest ever, and there's no proof yet that it was going to happen. And that's what they're doing to a lot of these companies. Yeah, these hype tech meme companies.
But I like what you guys started with the value stocks, right? So even when was it Meta now?
Yeah.
When that dropped, I think it was like, what, 40% or something?
45% at the most, I think.
And I was like, man, I got to see what the everything money guys are saying.
We were buying it up.
And that's exactly. I mean, I don't know what the exact number was. Paul was like, yeah, I lost a ton of money, but guess what? I'm going to keep buying more.
Yeah, I'm right now I'm down. I think I might have looked today at it was minus 33 or 35%, and I'm buying more right now. I mean, to me, I look at the company as they have 3.9 billion users across Facebook, Instagram, and WhatsApp in the world, which is, they have half the globe. I mean, people are like, well, their user growth is slowing. Well, yeah, no kidding, it's slowing. They have half the globe. You have everybody that has some kind of technology already. They're still driving revenue. They're still driving profit. They're an ad business. Even if they don't get into this metaverse the way that they think they're going to, I think they're still a great business. They still print cash. And I still see growth potential. Just because a company doesn't grow at 40% doesn't mean that 10% is bad. You know, at some point, a company that is over $1 trillion, and I think they're probably 700 or 600 billion right now because of this fall. Yeah. But even a company that is that big, you're going to have a hard time growing from there. I mean, I look at Apple. I don't expect that. Apple's returns over the next couple of years are not going to be great compared to what they were. Yeah. But they're almost a $3 trillion company. Yeah. Where do you expect the growth to come from?
Exactly. I mean, Facebook, everyone and their mother is on Facebook.
Everyone has Facebook. You know? Everyone has, and we haven't even tapped into China and Africa on Facebook. So who knows what the potential can be. Yeah. My projections are low on them, but even low is still a really good projection going into the future.
So what is an NFT? Right. I hear all of this stuff. I was watching one video of this 17-year-old kid who's made millions and millions of dollars on NFTs. And I'm like, dude, I don't have time to go into this. That's crazy he's doing that, but I don't care.
So it's really funny. Non-fungible token. That's what it stands for. I don't really know what it is. Okay. To me, it doesn't make sense because I could take a picture of this table and sell it to somebody. And my understanding is they can change one pixel in the image and they can resell it. Okay. I just don't get it, but I do find it funny. I do this morning show every day. I don't see NFTs talked about anymore. Yeah. NFTs they were all the rage for the longest time, and now they're just kind of gone.
I don't even know what kind of sparked the interest, I guess.
I don't know. Yeah. I really don't know. This stuff, maybe I'm not hip. or something. But we were going to start making like NFTs of our thumbnails from Everything Money and selling them because we were like, well, I guess. So Tim and I, our CEO, we started looking into how to make NFTs, and then everything kind of died, and we're like, damn. So but I don't know. This whole metaverse, this NFT stuff, the what other digital things? Oh, the Bitcoin and all of that. I don't get it.
Let's go into that. So I know you guys are all three of you are very adverse crypto.
To Bitcoin, yeah.
Let's talk about
crypto in general.
Crypto in general, yeah.
To me, I mean, I'll go from where I started, and then I'll go into regulations and stuff. So where I started is, to me, dog poop is worth more than cryptocurrency because I can sell dog poop.
Sure.
It's a tangible item.
If you find a buyer, yeah.
Exactly. But it's a tangible item. It's worth something. It's matter. It's real. Bitcoin is not real. It's this computer algorithm, and if the computer algorithm goes away, it's gone. That piece of poop I have forever. I could sell it. I just don't understand this whole cryptocurrency thing. It just blows my mind. Plus, now we're getting all these countries coming in and regulating it. I mean, China's banned it. We have countries like El Salvador and Mexico that are saying, yeah, we'll take it in and we'll make it our currency. I'm like, so no offense if you're from El Salvador or Mexico, but I don't really think that you're going to change the currency of the world from those two countries.
Yeah.
So the Federal Reserve is coming out and the president's coming out and saying, we're going to listen. If there was ever a rival to the US dollar, a true rival from not another country, from within the United States, you better believe that the United States government is going to shut that down so fast, or
it's the world's reserve currency. Yeah. I mean,
or they're going to do something to combat it and take control of it. And that's exactly what they're doing. You already hear the Fed coming out and talking about Fed coin. And that's going to be, all it is going to be another version of the US dollar.
Yeah.
And the other thing with Bitcoin or crypto, whatever you want to call it, when you buy something when you take US dollars to buy cryptocurrency, I'm going to use Bitcoin for example, it grows and then you sell it to hold more US dollars. So how is this a replacement currency? All you're doing is trying to grow US dollars with another avenue of increasing that amount. To me, it doesn't make sense. There's so many holes in it. I just don't get it.
You'll have to watch our episode 16 with Yoshi Nakamura, right? He's a huge Bitcoin guy.
Yeah, I mean,
big crypto.
Some people love it.
Yeah, I mean, I'm not doing it justice because I can't speak for him.
Maybe I'll watch the episode.
Absolutely. I mean, absolutely. Watch the episode and let me know what you think. But he is such an advocate for it. I mean, even if you don't have to be a diehard crypto fan, his big thing is if you in your investment portfolio, if you truly believe in diversifying, he's like, at least you need to have at least 5% in crypto because what if it does take off? What if something does happen? You'd be a fool not to. And I'm leaning more toward that way, even though I don't understand blockchain. I don't understand it. But I do know it has had a pretty good trend the last couple of years.
It's had a good run. But you said something important. You said, I don't understand it. And that to me is a big thing. If I don't understand something, I don't invest in it.
Exactly.
I am a very big believer in that. And I'm going to miss out on the runs
But that's okay
of
for you.
Yeah, it's fine for me. I mean, I would rather have competence in something and understand it than the other thing. I don't know. I'm not knocking this guy, of course. There's people out there that are maybe Bitcoin crypto experts, whatever. Every person that I've ever talked to is a crypto expert. They just say, you don't understand the blockchain. I'm like, what is the blockchain?
Yeah.
Well, it's a secure way of paying or something. I'm like, well, so is Visa. What is blockchain? And somebody explained this to me.
Yeah.
Somebody's going to want to explain it to me.
Yeah.
But like I said, if I don't understand something, I don't invest in it.
We'll have to have you come back in a couple months. We'll have Yoshi come back.
I'll listen to him. I'll be happy to listen to him.
We'll get a big table here, and we'll have you on this side, and then Yoshi on this side, and I'm gonna moderate the whole thing. And if you guys don't punch each other by the end,
I won't punch anybody. I'll tell you a funny story about Bitcoin. So my dad's a physician. Back in Bitcoin was like $2 at this point. That's how long ago this was. This was before Bitcoin was a thing. He was doing dictation. So when a doctor sees you, and you tell them you have a hurt ankle or whatever, they write it down in their notes and they're doing they talk it, and then somebody else, a stenographer, types it. So he was sitting next to another physician and he goes, you need to buy this thing called Bitcoin. It's $2 each. So dad decides to buy it. He spends $12 on it.
You sure?
This was a long time ago. So when Bitcoin got to like 18,000 in 2019, 2018, I was like, Dad, do you know what Bitcoin is? He's like, oh my God, I have those.
Yeah.
So he goes to log in. Can't remember the password. Of course, there's no forgot password because there's nobody behind this.
Yeah.
So he types in his 8-word phrase that he had to unlock his password and he can't figure it out. So we have one attempt left of this 8-word phrase, or else we're going to lose whatever 2 times, I don't know what Bitcoin is at now, or 6 times whatever Bitcoin is at now.
That's fun. I read it. So when
great job, Dad.
I think this was right after I graduated from Baldwin Wallace, and I graduated in 2018. And there was an article that came out that we were talking about. A couple of my buddies, they were like, "Hey, did you see that?" He was like a Canadian guy. He had like $70 million worth of Bitcoin, but he died.
Oh my gosh.
And it's so sick. Like blockchain is so secure that it's just out there.
It's just gone. Yeah.
And they're like, so he didn't put it in his will, but it doesn't matter.
Yeah.
Like no one knows the 8-word whatever password. Right. So it's just gone.
Yeah. I heard about this guy back when it was about $65,000 a coin.
Sure.
So he had like $240 million, and it was the same situation. He had one chance left at this password, or it just disappeared. And I don't know if he figured it out, but
yeah,
it's incredible, this whole thing.
So obviously you're not a crypto guy, not NFTs. So we'll go back to stocks.
I'm all the boring stuff, like the stuff that the old men like Warren Buffett and Charlie Munger like.
Sure.
But I will say that's just for investing. I do a lot of trading too. And if I trade Bitcoin all the time. I don't trade NFTs because I don't think they have ticker symbols, but Bitcoin, I trade it all the time. All this crazy stuff. I'll trade whatever there is to trade on a chart. But from an investment standpoint, no, not for me.
Stay away from it. So we'll go back to stocks then. So we've heard a lot in the last year. Maybe you can give us a good definition. First of all, what is shorting a stock? And then what's a short squeeze?
Okay, so shorting a stock, I'm going to put this very, very layman's terms because I can go into how you borrow from banks and this and that. Basically, what shorting a stock is, if let's say that company X is at $100 a share. Now, when you would want to go and buy company X, you would buy it and you would hope it goes to $105 a share. You would make $5 a share in that instance. From $100, if you're shorting it, you are betting that the company is going to go down in price. So if company X goes from 100 to 95, you profit $5 a share. Mm-hmm. That's what shorting a company is. Now, a short squeeze is interesting, and this is what happened during the meme stock stuff.
Exactly.
So there will be people out there that are shorting companies, like I just said, and they are betting on these things to go to zero. Now, we go back to shares outstanding, of how many shares there are outstanding. Now, to get rid of your short, let's say you sell company X short, it goes to $95. You are going to buy back, you're going to buy to cover. So you're going to buy shares because you actually sold shares. Now you're going to buy shares. So you're basically doing the inverse. Mm-hmm. Now, there have to be shares out there to buy. So what everybody was doing with this meme stock stuff is they were going and buying all of the shares outstanding. And if there's no shares left to buy, your stuff, as the price goes higher and higher, your account goes lower and lower and lower and lower. Mm-hmm. And theoretically, the risk of shorting is, let's say you buy a company at $100 and it goes to zero. What do you lose?
$100.
Exactly. If you short a company, it's an infinite amount that you can lose.
Sure. Oh my gosh.
Exactly. That's why risky. That's why shorting is so risky.
Yeah.
So that's why Vlad and all these guys from Robinhood, they halted everything, because these guys that were short on all of these companies like GameStop and AMC and whatnot, there were no shares left for them to buy. So they halted everything and said, guys, you can only sell your shares. You can't buy more shares of GameStop. You can't buy more shares of AMC. You can only sell them. Mm-hmm. So when they sell them and they take their profits, there's shares outstanding available. And those big hedge funds guys can go and buy and to cover their short.
Yeah.
And
it's scary stuff.
Oh, it's crazy. But that's what a short squeeze is.
But we hear so many people that are not well versed. They don't know the 8 pillars.
They don't know anything.
Exactly, but they get it's the hype, right?
They look at it, this is a casino.
Exactly, and they're trying to make that quick buck.
Yeah.
But what's terrible is you have so many people that just, like you said, it's kind of that FOMO, like, oh, I just made $100,000 in 2 days.
This is easy.
Exactly.
Yeah.
Everyone and their mother can do it.
Yep.
But then you get to, we're at almost end of Q1 2022, and now people are really hurting.
Yep.
You know what I mean?
Yeah.
So for your average, obviously I don't think you would ever advocate for a novice to do this, right?
No, I think don't just jump into it. Something interesting about the stock market is, imagine if, this is what Paul said one time, he melted my brain.
Sure.
He said, imagine if everybody in the world was really good at your job. Mm-hmm. Let's say you're a mechanic out there. Every single person in the world is an expert at your job. This is what people think when they come to the stock market. They think that, oh, anybody can do this. I'm an expert at this. Yeah. And it's like, Well, no, that's not possible. So if you're a novice, guys, there's great resources out there. I mean, come to Everything Money. That's one resource. There's so many books out there. The Intelligent Investor, The Psychology of Money is a great book. That's not necessarily investing, but Good Stocks Cheap by...
We do have that one up there.
Do you? Yeah, Psychology of Money.
Yes.
Good Stocks Cheap by Kenneth Jeffrey Marshall. That's a really good book to start with. There's just there's so many books out there that you can read just to get started in investing before going in, throwing all this money in the market because your friends are doing it and thinking that you're going to get rich, because you're not. There was a time, that's why 2020 and 2021 were so dangerous. It was so easy for everybody to make money.
Easy.
If you didn't make money, there's something wrong with you.
Yeah.
That's not reality. It's just not.
Correct me if I'm wrong, but really, nothing's really changed in terms of your methodology then. Even though, things are in the red now, obviously that doesn't mean, that's not phasing you, right?
No. I mean, to me, I look at, right now I'm sitting on probably 70% cash.
Sure.
And because I was just taking tons of profits on the way up, and I'm happy to start deploying capital today. I mean, I was looking at multiple companies today. I bought something today. I was standing in Chipotle and I was like, yeah, this is a great idea. So, which has gone downhill, by the way, Chipotle. But I bought a company today. I just added to my position because I see it as a great play right now. I think stocks are going to get hit more, and it's going to be very bad for a lot of people out there. But unfortunately, that's what has to happen in these cycles. I mean, you look back to the .com in 2000, a lot of people got hurt. 2008, a lot of people got hurt. This is just what happens. If you go back in history, this is really what happens in history. People have 100%. To get hurt for things to work out, and people like me that do value to make money. Yeah. It's unfortunate, but it's true.
So we, in the last Wednesday, the FOMC met and the Federal Reserve increased their base rate, the Fed funds rate, by 25 basis points, right? What have you been seeing since that, and how is it affecting you as a as a day trader?
So it was very interesting. It was funny because on my morning show that day, everyone was putting in the comments, like, are you expecting the market to crash when Powell says that they're going to increase rates by 25 basis points? I said, guys, I don't think you should be so sure that the market's going to crash when he says it, because I looked at it saying, well, they're not going to raise it by 50 basis points. And that to me is probably a good thing for the stock market, because they don't want high rates. They want these big tech companies to just keep borrowing at extremely low rates. And that's what they did, and that's what's happened. You've seen the last 5 or 6 days, we've had an incredible rally over the past couple of days. In the long run, we were talking about this before the show, the Fed has put themselves in between a rock and a hard place. You print and give away $13 trillion during a pandemic with no exit plan. I mean, this is a great, I thought of this the other day. You sell mortgages. Well, I don't know, maybe not the majority of people. People that are smart put in place a plan over 15 or 30 years, I'm going to say 15 or 30 year mortgage, to pay off that debt that they're taking out. Say they take out $500,000. Sure. They have a plan going forward. Yeah. You're going to say we printed $13 trillion and had no plan of what to do to come out of this? Yeah. We didn't think that inflation was going to happen to these levels. We don't what is going on?
Just keep printing it. It'll be fine.
That's exactly right. And I'm like, I just don't understand how this works. So they're going to have to increase rates soon. But they have to be very careful, because as rates go up, people are going to get very scared. And if they raise them too fast, they're going to cause some sort of deflation, which is going to be a bigger disaster. This is just a very big disaster. And one wrong or quick policy move can bring down this house of cards.
Absolutely.
It's not a good situation.
We've kind of set ourselves up for that failure.
Yeah. But it's unfortunate because we almost have 8% inflation in this country. Yeah. That's not even including food or energy. And they're raising it at quarter point. Yeah.
And how are big investors supposed to make, at least for mortgages, how are they supposed to make a good spread if inflation is that high and you have mortgage rates at, let's say, 4.5%, 5%? Well, you're net negative now. Yeah.
This is a bad spot. It's going to end badly. That's what I think is going to happen. It's going to end badly. I can't say when, but it will.
What are your thoughts moving forward then, as we're progressing? Obviously, there's a lot of noise in the world right now.
There's so much noise. But I don't think the noise should distract people. I always tell people, I'm assuming that the average listener is a person that just gets money from work and puts it into the retirement account and maybe invests it in the stock market and an ETF and lets it go. I'm a big believer that every single month you should take money, put it away, put it into the stock market, and invest it every single month consistently, no matter where the market is. Sometimes the market's going to be where it was in the end of 2021, and you're overbuying. And it sucks. Because everyone's saying, oh my God, the market has to fall. The market has to fall. Well, just buy it there. Every month, just buy it. When we get into a recession and the market is really low, you're going to be buying really cheap stocks.
Yes.
Keep doing it. And eventually you're going to have, the market goes like this over time. Eventually you're going to hit that line right in the middle. That's the average. And you're going to be fine. So to me, if you're the average investor, just keep month in, month out investing in low cost ETFs. I'm not a big believer in financial planners. I think anybody can do this. People overcomplicate this. Buy low cost ETFs like S&P, SPY, Vanguard, anything you want, and you'll be fine.
Yeah.
You don't need a financial advisor for this.
Yeah.
Or mutual
100%.
funds or anything. Mutual funds don't beat markets 80% of the time.
So just open up your own Fidelity and then
That's it.
Yeah.
Just put it. What I do for my brother and myself is I just take all of anything that we get as far as income and we just put it into the SPY and let it roll for a lifetime. I'll be very happy in the end.
Yeah, but like you said, and the last time we were met a couple months ago, you were talking about like, listen, there are peaks and troughs, with the stock market, but just keep investing. Don't do anything different.
Yeah.
And it's a good parallel for life, right?
Yeah.
In life, you're going to have big peaks and low troughs and everything. And then at the end of the day, you have to keep doing what you're doing.
Exactly.
And eventually when you look at the, an elongated vision of this, it's always going up.
Exactly. Yeah. The hardest part about investing is emotion. People can't stomach it. I mean, if you buy an Alibaba or a Facebook and it drops 40% on you, that sucks. I mean, not a lot of people can stomach that.
Yeah.
But if you understand why you bought it 40% higher, then you will be okay with it. Like I'm down 35% on Facebook. I don't know what Facebook is at today, but let's say I bought it at 260. There was a reason I bought it at 260. And even though it's 200, nothing changed. It's just that the public perception of the stock price should be lower. Okay, that's cool with me. I mean, you can make it cheaper. I'll go buy more.
Sure.
Nothing's changed fundamentally in the company. A big thing that people need to do that invest in individual stocks, they need to separate company from stock price. They're not the same thing. The stock market is a voting machine in the short term and a weighing machine in the long run. And it always weighs itself where it should be. But people like these retail investors, they send this stock price all over the place. And that's when people get scared. You don't worry about your house every single day of what your house is worth, do you?
No.
Because you don't have a ticker symbol sitting on top of your house saying that, your house went up $10,000 today. It went down $5,000 today. That's what the stock market is. That's what the emotion is very difficult. Yeah. When people start thinking about it that way and say, I don't have a ticker symbol on top of my house. I don't have a ticker symbol on top of my business, a private business. That's a great thing.
And speaking of real, from last time we spoke, I know you didn't, but do you do any real estate yet or not?
I don't personally do any real estate. I invest with a company to do any real estate.
Oh yeah. You're right.
Yeah, I invest in Paul's company, Crossroads Group. They don't take any investors. So, but we own 2 homes in Mexico, 1 in Turks and Caicos. I'm part of a apartment building fund where we own multiple apartment buildings. So any real estate that I do, I just do through them. I don't have a passion for it. I don't want to reinvent the wheel. Yeah. I have guys that are close to me. Exactly.
Are you familiar with Ray Dalio?
Oh, of course.
Okay.
Are you talking about the video? Did you watch the video that he just put out?
That he just put out?
Yeah. The changing world order.
Oh, yeah, I have seen it. Well, I read it. I'm reading his book right now.
Oh, so am I.
Gotcha. So he's a big advocate, obviously, in the last, he was looking at the last 500 years of the different empires that have had the world's reserve currency. So they were looking at the Dutch, the United States, the British Empire, so on and so forth. And he's looking at different trends of when will China, the new rising power, come up and eventually take over the United States. Yeah. And he's a big advocate for China. Obviously, I think he's a little biased because a lot of his investments have been with China.
Yeah, and he's been investing in China since the late 70s, early 80s. Yeah. He lived there for a short time.
Yeah, I think his son actually studied in China, in Beijing. Yep. Are you an advocate for any, because he was talking about any Chinese bonds or anything like that? Do you think that could be a trend?
It probably is. I'm not a big foreign stock investor.
Why is that?
It's competency. Yeah. And even I do hold Alibaba right now. That's one Chinese stock that I own. And again, the reason that I bought Alibaba is because Charlie Munger bought Alibaba.
Sure.
And it's not because I don't know what Charlie thinks Alibaba's worth. He could think it's worth $200 or $2,000. I have no idea. But the fact that he trusted those numbers because China does have a history of not having the best accounting practices.
Yeah.
So
a lot of, not just that, but like maybe a lot of different things.
Exactly.
Too, yeah.
So that is my hesitation to invest in China. I mean, we saw it with Luckin Coffee in 2018, 2019, whatever it was. That was a scam. And now we're seeing it with Tencent Music. There's a lot of money laundering going on in there. Or not Tencent Music, Tencent Holdings. So that's the reason for it. Now, when Ray Dalio talked about that China is going to become the superpower, I do think that's going to happen. We're probably at the end of our cycle. Again, it's like a company. When you get to a certain point, a $3 trillion company, it's really hard for you to continue to grow. They're an emerging market still. China's still an emerging market. They have 1 billion people. They have a lot of tech. They're probably going to become the reserve currency in the next 20 or 30 years.
Yeah, I don't doubt it. Yeah.
With that is going to come more stability and credibility of their accounting practices. So I will probably become an investor in China sometime in the next 20, 30 years on a consistent basis. But that's really the reason that I don't right now. That's really the reason why I don't invest in a lot of countries. Yeah. Other countries.
Because you don't know their policies.
I just don't know their policies. I don't understand how it works. I really have no say in it. It's very difficult for me to invest in other countries. The Alibaba one, there was a reason for it, and that was Munger.
Do you do any other bonds or just?
No? I've been looking a lot at the municipal bonds, because I just want to get that tax-free income.
Okay.
I do like the U.S. Treasuries. Any cash that I have, I put in 90-day Treasuries. It's great now because they're finally paying something. They're paying about 0.43% now.
Yeah, okay.
I mean, I think the 10 years 2.48 or something like that. But before, the 90-day Treasury was paying like 0.01%.
Yeah, exactly.
I'm almost giving the government money right now. So that is a good thing. But that's really the only kind of bond that I do. Bonds are very difficult to understand.
Yeah.
Anybody that says they understand bonds, I really want to question them to see if they're that intelligent, because the bond guys are the most smart and detail-oriented guys in any room they walk into.
I've never, and by no means have I read all of The Intelligent Investor.
They talk about it a little bit.
But they talk about it a little bit. And I think from what I remember, they were saying, when it comes to diversification, you do want to have a little bit of bonds.
Yeah, that's what Ben Graham always said, is diversify in that way. If anybody really wants to learn bonds, you can read Security Analysis. It's also by Ben Graham, who wrote Intelligent Investor, but it's super detailed. It took me 6 weeks to read the chapter. I had a conversation. I have an investing coach, mentor, and he we talked about it after 3 weeks. He's like, okay, go back and do this research. It was the hardest chapter I've read. It's just so detailed, and I just don't understand bonds. Yeah. So I try to do it at a very surface level.
So let's get some of your advice then. So, because we've talked stocks, bonds, crypto, we talked a lot of different of these different asset classes, right? So for the average American, we'll just say, they're making, an individual, we'll say, for a household, they're making $100,000 to $125,000. Okay. Maybe they have a couple credit cards, car loans, maybe a mortgage. Now, what are you telling this person? Are you saying, hey, let's, pay down debt? Are you saying invest? Are you saying do both? Like, what are you telling this individual?
So it depends on your debt. This is controversial between your boss and me.
Well, Hesh is, yes, I know where you're going with this.
So I am a credit card debt. No. I'm not. You got to pay off your credit card debt. Pay off your student loans. If you get, unfortunately, I have a friend whose dad just passed away, and he's getting a chunk of money. Yeah. And he was like, Mo, what do I do? I was like, dude, take that. He's like, do I start investing now or what? And I said, pay off that student loan debt. He's a pharmacist. He's going to do very well. Like, just get rid of that debt. You don't need that anymore. You got some great forgiveness from the government during the COVID time, and just pay it off. Move on. So he's going to do that. I think he's going to be in a much better spot. Credit cards, again, don't rack up debt on those if you don't have to. Mortgages. I think that you should hold a mortgage if you're an investor.
Yeah, sure.
If you're, just think about it this way. If you're an investor putting away money into the stock market every single month, in and out ETFs, like I talked about, you're going to be making more than, I should put a caveat in there. If the interest rates are where they are now, let's say what are they getting right now for a 30-year?
20% down, 30-year.
4%?
This is no commitment or anything like that. Yeah. But around the 4s.
Okay, so around the 4s. So you're going to beat that. The average return of the stock market over a 7,500-year period is 9.9%. So you're going to beat that. I look at it saying, why would you not? invest in the stock market, and why would you try to pay down your debt?
Yes.
It just doesn't make sense.
Your interest rate's tax deductible.
Exactly.
Yeah.
Exactly. So, but Hesh is like, because I just bought a new home. He was like, why aren't you paying for this in cash? I'm like, because I don't want to do that.
Yeah.
Because he's like, you should just pay off your home in cash. You could sleep better at night. And I was like, I don't think I'll sleep better at night. I think I'll sleep worse because I put that all my cash. But my advice would be, if you get rid of your student loans, get rid of your credit cards. Car is fine. Make sure it's an affordable car. Don't go crazy. I've seen people driving around in these fancy cars.
Oh,
Guys,
yeah.
don't do that.
Yeah.
I mean, at some point in your life, you'll be able to comfortably afford those cars.
Mm-hmm.
And then a home, don't overbuy what you can't afford. Don't go try to live this baller lifestyle. And to me, I think a 30-year mortgage rate at these interest rates is a good number. Now, if we start going higher and higher and creeping towards like 6 and stuff, maybe it's a different conversation.
Yeah, we're just in a weird, I mean, in the real estate industry, we're just in this very weird period where typically interest rates rise, purchase prices come down.
Yeah, it's not happening.
But
they're just going higher.
It's not as, the appreciation isn't as high as it was the last 2 years. Kind of just like, this is the stock market. But
real estate got crazy there for a while.
So I always say this, I mean, I bought my duplex in February of 2020. Yeah. And
ooh, wow.
Right. Yeah, exactly. 2020. So now, I mean, that thing will appraise for probably 215. Oh yeah. And it's in a very good neighborhood and everything like that. So nonetheless, we're in this weird, awkward period where we just have so much demand and it's not curbing anything with our interest rates. Right. So purchase prices are going up. Right. Interest rates are going up. Right. So you're going to be stuck, unfortunately, the next probably, I don't even know how long, I can't even say, where you're not going to get a house for what you want to pay. It's true. And you're going to get a higher interest rate.
Yeah, it's true. Everything cycles. Mm-hmm. It's not going to be a good cycle.
So we talked about the house. Obviously, we won't pay that off. So make your minimum payments and everything. Yep. And
I'm not a big proponent, unless you're in a very unique situation. I'm not a big interest only person.
No, yeah. So simultaneously, though, as you're paying off these credit cards, keep the car. Yep. Spend less than you earn. Yep. Where are you investing then? If I'm not a guy who wants to do all these crazy things, like what's easy?
Yep. Save as much as you can. Put it in the SPY, which is the index fund of the 500 companies in the S&P 500. Put it in the Vanguard. VOO is the ticker symbol. They're just low cost ETFs that are going to grow with the market over. Like I said, you're going to have some bad times, you're going to have some good times, but by the time you retire and call it 30, 40 years, people our age, you're going to be very happy with your investment. Mm-hmm. Do not try to get emotional in time markets. It doesn't work. Mm-hmm. There's only time in market versus timing market is a very, very true statement. Yeah. It's very simple, but it's very true. So
I gotcha. Understood.
That's what the average person should do.
Mo, just talk about this. We talked a lot about money, everything money. Yeah. Talking a lot of stocks. Yeah. Great financial advice. Talk about just your mindset, like how do you, like your leadership. Obviously you have to be you're a very calm person, whatever, but
I bring calm to the Everything Money team.
But you work in such a high stress environment. How do you maintain that? Like, what is your mindset around that?
It's funny, like I said, the emotional game is the hardest part about investing. And for whatever reason, when it comes to investing in money, I'm just not an emotional person. I'm really not an emotional person a lot of times.
In general, yeah.
People do get annoyed with my girlfriend. She's like, "Can you just like show something?" I'm like, "I got
just nothing. Show me a tear."
Yeah,
come on, Mo.
I'm like, I have no emotion right now. So, I guess I've been cursed, blessed, whatever you want to call it. With that, there are ways to train yourself to have less emotion. I mean, if you do this and learning the stock market is like anything else. It's just repetition. Mm-hmm. Just do the same thing over and over of the right process, and you're going to do very well. Mm-hmm. Eventually, you'll learn that when you invest in a company that goes down in price, you bought it for a reason at a price that you believed in, and that stock price moving down on you is not a bad thing. Mm-hmm. Once you wrap your mind around that, it'll be okay. There's so many people that are subscribers to ours or to our community, and they're like, "Mo, you got to talk me off the ledge here." And I'll basically say that to them, and they'll be like, "You're right. It's okay." It's also really good to have people around you that can help you, mm-hmm. that have the same mindset. That's the great thing about our community that we've built. I never really had anybody And then I had Paul, and it was just me and him, and before Everything Money happened. But it was really nice to just have somebody with the same mindset that you can bounce ideas off of. So surrounding yourself with like-minded people, good people, it can really help control your emotions really well.
And you say, like, show me your 5 closest friends. I'll show you your future.
That's it. I first person I ever heard that from was A-Rod. I know A-Rod didn't say it, but he said that, and that's the first time I heard it, and it is so true. It's so true. There's people. Actually, it's funny. February 29th of 2020, that was the last time I spoke to my group of friends from high school, because I realized they were just toxic people. And I was like, I just want to get them out of my life. So one kid got married. It was a Saturday, and I never spoke to them after that night again, because I was just realizing, I mean, it sounds harsh, but you have to do that. There's things that you have to do if people are toxic to you and bringing you down, and don't feel bad about it. It's better off in the long run. Remember that we talked about in the beginning of this. You got to rip the Band-Aid off at some point.
Absolutely. I think that's another parallel for life too with stocks, is just the FOMO. Man, I see on social media, you're downtown Cleveland, it's Saturday, I want to be out there, but all right, dude, I know you're spending $600 on drinks and and so on and so forth.
FOMO is hard to control. But again, that's really,
you're so disciplined.
Yeah,
it's crazy.
Eventually anybody can get to the point of this kind of discipline. It's just, you got to train yourself to get there. Understand that I'm not investing in this for a reason. I mean, when I saw GameStop flying off, like going crazy, I was like, oh, that's pretty sweet. That went up like 1,000% a day. I mean, yeah, would I want to make 1,000% a day? Sure, but I didn't understand it. It was out of my core competency, and I don't have FOMO about it. So people can get there. I feel like people that don't understand and are the novices, they're the ones that have the real FOMO. The more understanding people, like my friend Gary, he's a really good value investor, and he's like, I would never touch this stuff. He was like, you're crazy for investing in China. I don't understand China. I'm like, well, yeah, that's fine.
And you're only in Alibaba.
Yeah. I'm only, but the point is, he's like, he doesn't understand that. He's not comfortable with it. He doesn't have FOMO about it. Yeah. He's like, I'm sure that Alibaba is going to do very well and go to the levels that you think it'll go to. But I'm not going to worry about that. I'll find something else.
Very good.
Yeah.
Mo, so then last piece is I just want to hear just overall just life advice for anybody who's out there just kind of struggling right now, or is just in a place like, and I like to think of you when you were in medical school. Obviously, I can imagine the emotions that were running through your head and everything. And, what's your advice to those who are just trying to make their life successful as they can?
It just trust your gut. Your gut is right 99% of the time. Surround yourself with really good people. Start investing at a very young age. I go to high schools now, and I talk to kids that are 15, 16 years old, and I'm like, hey, you guys thought about retirement yet? And they look at you like you're crazy. Yeah. But the sooner you start, the better off you're going to be. So it's never too young to start. I talk to people that are 50, and they're like, I got to do something about retirement. I'm like, okay, we can do this. It's going to be hard because you don't have time on your side, but we can do this. So, man, the biggest thing is just surrounding yourself with people. That is such a true statement, and it sounds so cliche. I don't like cliches, but
they're true.
There's so many cliches that are actually true. So, and remember, I graduated high school with 2.2 GPA. Yeah, 375th out of 400 in my class. Yeah. It's not about everything doesn't end in high school for the high school kids.
What does a 2.2 mean now? You know what I mean?
Yeah, it doesn't mean anything. I'm very proud of my 2.2 now. So
for our listeners who don't know Everything Money, where can they find you?
So youtube.com/everythingmoney, everythingmoney.com. You can find me on Instagram at tradermo_EM. Oh, you can email me, mo@everythingmoney.com, mh@charmoscapital.com, mh@charmoscapital.us. That's it.
Cool,
Shoot
man.
me an email, whatever.
Well, hey, man, it was amazing having you on. I learned a lot. Should have took more notes, but I took a lot of mental notes.
You got the podcast to look at.
We'll have Seth and Gabriel on
for sure.
hopefully soon.
Yeah, that sounds good. Anytime.
Absolutely. Thank you again.
Thanks, man. Appreciate it.